morning and public.
So the today's topic is small and mid cap correction. Is it a fear or an opportunity? So expected duration of this PPT is about 50 minutes. This is a standard warning from SEBI. Investment in securities market are subject to market risks. Read all the related documents carefully before investing. So our objective is always to help investors to enhance their returns, and that can be by like wisdom sharing, experience sharing, like presently what we are doing, and also by offering valuable stock investment insights and investment recommendations via our various products and services. So to begin with, due to the changes in the WhatsApp policy, in fact, the Meta policy, we have dismantled all our broadcast groups, and instead we have started the channel, WhatsApp channel. And those who wish to join, they can scan this QR code to join this WhatsApp channel. We already have more than 400 investors in this channel. And this can be really very helpful for all of you because we are sharing only 3 to 4 insights or updates this channel. I request all of you to scan and join this WhatsApp channel. So today's webinar will have the 5 parts. First one is the market behavior. The second comes fundamentals check. Third is sector-wise prospects. And when will the normalcy return? That is the moot question from almost all the retail investors. And then to be followed by question and answer system. So which option is correct based on the historic returns? What do you feel? Can you write in the chat box? So option A is small cap have given more returns than mid cap, which have given more return than large cap. Option B is large cap has given more return than mid cap, and which have given more returns than small cap. Option C is mid cap given more return than large cap, which have given more return than small cap. And option D is don't know. Please write your answers in the chat box. Okay. As I can see, the majority has gone with the option A, and second is with option B, and third is with option C. I think nobody has opted for option D. I'm very happy to see that we all know. So what are the options? As you have rightly answered, option A is the correct answer. So historically, small cap have given more returns than mid cap, which have given more returns than large cap. Thanks for your participation. So this is the last 5 years chart, which depicts the 3 indices. The blue one is the small cap. The yellow one represents mid cap, and green one represents large cap. As you can see, since the beginning, small caps have outperformed to mid cap and large cap, and mid cap have outperformed large cap stock. So this is for the indices. And during the last 5 years, the returns generated by large caps, that is the S&P BSC large cap index, is about 90% compared to 161% by mid cap and 186% by small cap. So small cap have far outperformed. They have given more than 100% better returns compared to the large cap. So that is phenomenal. And this is not for only 5 years, but even for the longer durations. Now coming to the bit short-term period, as we all know, our portfolios, that is, I mean to say the retail investors' portfolio are underperforming compared to the BSE sensitive index or Nifty 50, which are basically large cap stocks. So with effect from 1st of October 2025, that is for about 2.5 months performance, mid caps have underperformed the large cap by 1%, while small cap have underperformed by 7% with respect to the large cap. And that is the main, I can say, main issue. What the retail investors want to know, why it is happening and how long it will happen. That is the moot question. Because in stock market, it is always the fear, it is always the uncertainty which keeps us on our toes. So overall returns during this last 2.5 months, BSE since this small cap has given negative 2% returns, mid cap positive 4%, and large cap positive 5%. This may vary widely with respect to your personal portfolio because this represents the indices which have specific stocks. They do not have all the stocks. Now the issue is if the short-term performance is little bit disturbing, but in the long term, it is almost assured that small cap and mid cap outperform the large cap, then why we are worried? It is just because of the recency effect, because it has happened after a long time. And that is why we are so much bothered. Now, this is a very familiar cycle. There is nothing new, or there is something which is not happening for the first time. As you can see by the red marks, these are the points from where the small cap and mid cap have started underperforming the large caps. Now you can identify what are these points. These points are the recent highs. I should not say recent highs, but at that point of time, they were almost at the peak. So it happens that every time when the market keeps on moving, I can say when the market is in sustained bull mode, the small cap and mid cap valuations go overboard. They are overvalued. And this has happened recently also, as you can see. Recently, I mean to say, is during the period October, November, December specifically. As you can see how the indices have moved up. All means not only small cap, mid cap, but also the large cap. But small cap was the fastest mover. And that is why reaction was almost certain. It was only a matter of time when. Now coming to the US markets, how the US markets are performing compared to the Nifty 50. So in US market, the popular indices are Dow Jones Industrial Average and Nasdaq Composite. Now Nasdaq has given 20% returns during last 6 months, while Dow Jones has given 14% returns. Here, it is very important to note that even Dow Jones Industrial Average have the stocks, technology stocks like Apple, and so even the Dow Jones Industrial Average is impacted by the high valuations of the tech stocks. And in Nasdaq Composite, it is mainly the tech stocks. Compared to which, Nifty 50 hardly has any tech stock. When I say tech stocks means related to AI. So in India, there is hardly any big company which has significant proportion of revenues being generated by AI business. So we don't have that kind of uh, stocks, those kind of companies in Nifty 50 or even in BSE sensitive index. And our returns have been 3.4% compared to Nasdaq return, this yellow line, of 20% and Dow Jones Industrial Average return of 14%. So that is one of the reason why the foreign investors have shifted their money to the US markets, because there the AI is booming like anything. We all know, and nothing new. And this is for the 5 year performance. So for the 6 months, you have seen clearly Nasdaq was the leader, followed by Dow Jones Industrial Average, and followed by Nifty 50. But if you go for long term, for say 5 years, then you can see Nifty 50 has given uh, better returns. Of course, the margins have reduced, but it is a very clear signal that it is the Nasdaq which has made the difference during last 6 to 8 months. This is the yellow line, right? So this blue line for Nifty and Dow Jones Industrial Average are still in synchronism, but this yellow line, it is making the waves. Now, why it is happening like that? As we have discussed, the FIIs, foreign investors, are selling in India and investing in US stocks mainly. This is the FII net investment pattern during the last 5 years, except for 2023. For the rest of the 4 years, they have been net sellers. And the biggest selling came in the current year, that is 2025. So till date, they have sold stocks worth, this is a net selling, okay, worth $26 billion. That is a big amount. Despite this big selling, our indices are more or less stable. That is credit, and that credit goes to the mostly to the retail investors who are continuing to invest despite their portfolios not doing that well. So you must have read in the papers or in the YouTube videos, there is a talk of AI bubble. Now that only time will tell whether it is a bubble or not. But of course, the valuations are very, very steep, and the benefits of these AI products and services are yet to be matched with the kind of investment being made in these companies. So it is only the future which will tell. But it is one thing is very certain, that AI is going to change our lives. Will it be so significant or not? That is a question. So what will happen if the bubble bursts? If bubble bursts, definitely a lot of investment has been done by the VCs and the banks in the AI companies, and not much by the equity investors. So there can be trouble. It is very difficult to quantify the kind of trouble or the kind of institutions which will take it. But definitely there can be a big trouble in US markets. But then if they sell, if these financial institutions, when they sell, where will they park their money? So there, India presents a very good opportunity because we don't have AI stocks, and that can be a benefit for Indian companies, Indian stock market in insight. Now the question is, if the broad indices are stable, then why small and mid caps are falling? So due to high speculative activity in 2024, valuations went too high, and then the markets stabilized. I mean to say, when the small cap and mid cap stocks, they stabilized, then the returns dropped and the speculative activity declined. Also, there were many measures taken by the regulatory authority, and which has reduced the speculation. But with the reduction in speculation, it also leads to the fall in liquidity. So, and this is nothing new, as we have seen in the past also this has happened. This has happened in 1992. There is a securities scam. It's happened in 2008, 2000, the year 2000.com bubble burst. So there is nothing new. And this time there is no as such, there is no clear cut, we can say that bubble has burst or something like that. But this I am trying to explain you why these are falling. Now, due to the reduced speculative activity, the volumes fall. Suppose a big investor comes and he is in need of money and he sells a part stake in a company. So what happens, because there is not much buyers, there is no depth of liquidity, the stock falls because there are no buyers. Moreover, even after the stock falls, there is no sustained buying activity because the investors are cautious. So that is how the stocks fall, and they come out very slowly from that channel. Now, one thing we should understand, that demand for stocks is not like the demand for food. Demand for food is a necessity. We need food, so we have to buy the grocery and all those things, related things. But in the stock market, it is not a necessity. Okay, so investors keep on holding and looking for better and better opportunities. At the same time, there is a class of investors who is in need of money, and that is the kind of investors who create a selling, because it is their necessity, because they want money, and there is no buying from the rest of the investors. Now the question is, how long will small and mid cap stocks underperform large caps? Coming to the second part, that is the fundamental check. This we will cover in the coming this thing. How long small and mid cap stocks underperform large caps? This we will cover in the next coming slides. Coming to the fundamentals check, is there anything wrong? As far as the economy is concerned, government continues to make massive investment in infrastructure, including the digital infrastructure. And recently, whatever conference calls have happened and whatever we have read, it is very clear that there is a pickup in rural demand, and urban consumption remains steady. There is no change. Inflation, we all know, has fallen to very low levels, and government has also cut the GST rates to boost the demand, to boost the economy. Interest rates have been reduced. Even the last interest rate cut by 25 basis point was not being expected in the stock market cycles. And recently, maybe day before yesterday or yesterday only, the RBI governor has said that the low rate interest rate regime is likely to continue for long. Coming to the results for the latest quarter, yes, these results have been fantastic. And I will let you share how we come to the conclusion that results have been fantastic, not only about from the whole set of numbers declared, but even in our in-house research, we watch each and every company result, and based on certain criteria, we put that stock into our watch list, which meets our criteria. So, on an average, for the last 4-5 quarters, the number of stocks which we put into the watch list has been varying from 150 to 180. But I am very happy to share with all of you that for the latest quarter, the number of companies which we have put into the watch list has been 213. That is a big jump. That clearly shows that yes, even the mid cap, small cap, and large cap, all companies are doing very well. Now, this is the US CPI data, that is Consumer Price Index. So why I am showing the UK inflation here? Because as we all know, US economy is very big to be ignored. And if anything happens with US economy, that calculates down to the rest of the world. So this, the blue color is the overall inflation, CPI inflation, and the brown one is excluding food and energy. Coming to the Indian markets, this is the CPI data from November 24 to November 25. That is for the 12 months. So exactly a year back, our inflation, headline inflation was 5.48%, which has fallen to 0.71 for November 25. That is a very, very big decline. Okay? And food inflation has fallen much more significantly, and it has fallen from 9.04 to minus 3.91. So it is very clear that we are likely to have a low inflation for at least for the foreseeable future in 2026. So as far as the inflation is concerned, rest assured, everything is under control. And this is the repo rate, as we were discussing. The repo rate has declined from 6.5% in October 24 to 5.25% in December 25, and that there is a consistent decline. And this decline is likely to continue because, as we said, the inflation is significantly down. So this bodes well for the corporate India. Now, coming to the confidence in the economy, recently some Japanese companies have made investments, and coincidentally, all these investments is in the financial sector. In May 2025, Sumitomo Mitsui Banking Corporation acquired 20% stake in Yes Bank, and that amount is 1.6 billion. December 25, that is this month itself, Taiwan Securities Group Incorporation. This is a major financial institution, and they are going to acquire 15% stake in Ambit's wealth management arm. Already, they have made 2 acquisitions in this group, and this is the third. Mizuho to acquire 60% stake in Avendues Capital, and reported valuation is 4,700 crores. Now coming to the big one, recent one, and that is the Mitsubishi UFJ Financial Groups acquired 20% stake in Shriram Finance for about 40,000 crores. So this is in a span of just a month. You can see there are 3 investments by the Japanese financial firms. Particularly the last one is a big booster. Coming to the US investments, yes, US companies have declared big plans for India. As you may be aware, in October 2025, has declared that it will invest $15 billion to build an AI data center in Visakhapatnam, that is in Andhra Pradesh. Then this month, Amazon has declared an investment of $35 billion in the next 4 years. Microsoft will invest $17 billion in cloud and AI. So these are the kind of things which indicates that there is nothing wrong with the economy. Everything is fine and good. It is only a normal correction which is going on in the mid cap and small caps. Now there are news, or rather I can share the rumors or whatever you may say. There is a talk of sharp depreciation of rupee. Yes, of course, during last 15-20 days, rupee has declined substantially, except for the last day, that is yesterday, and the rupee has appreciated significantly. So this is a long-term chart from December 2015 to December 2025. That is for the last 10 years. Rupee has declined by 35.63% in absolute terms. Okay. Now, as you can see that there is a gradual phenomena, and of course, after every year or 2, there is a decline in the value of rupee. But from 2023, that is 2023 to 2024, the rupee was very much stable around 80 to 82, 83 rupees. There was hardly any depreciation in the value of rupee. And it was only recently that there was this major significant decline. So nothing to worry about. If you look at the long term, it is a normal phenomenon. I cannot see any significant departure from the past trend. Now, this is for the last 5 years. For the last 5 years, rupee has declined by 21%. And I have tried to fit a line. This is the orange line. And as you can see, there is a gap of about 2 to 3%. Nevertheless, it is uniform and nothing to worry about. Coming to the sector-wise prospects. So before going to the sector-wise prospects, like take a small pause, I would like to share with you what we do. What we do means our company, Smart VRC, and our philosophy is always smart as far as the stock selection is concerned. Otherwise, also we are smart. And why smart? So it stands for the story. Behind every stock, there is a story. Apart from what we are able to see is the share price. But behind that, there is a company which is doing something, which has certain plans, which has certain story. We respect Mr. Market. Market is our best friend. It is the market which allows us to buy low at low valuations and sell at high valuations. This gives you immense opportunities and keeps on giving you the opportunities. So it is not a one-time affair. It keeps on giving you. So it is up to you what you accept, what you don't. It is not that with every opportunity you have to do something, not necessary. Like a cricket. Coming to the assessment, we use the PEG ratio, and we have used this PEG ratio for valuing the stocks. And we have used this PEG ratio for more than 13,000 times in our various research reports. In-house. Coming to the R stands for the rational. We are always rational, logic-driven. Nothing. We should not get into the flow of the emotions. Otherwise, it will kill us. Or it will not allow us to act rationally. So you should always be rational. Coming to the last one, T stands for time. Yes, and that is why we always recommend to invest for long term. In the very short term, you can make profits, but if you want to build a wealth, you need to invest for a long time. You need to stay with the stocks, stay with the stock market for a pretty long time. So we have got 4 products, and this is the comparison. First is Smart All Cap Portfolio. This is a portfolio of 20 stocks, and this was started in 2001. Compound target is about 25 to 30%. Holding period, this portfolio is going to remain in existence up to 2040. And we not only recommend the stocks you need to buy, but also we recommend the stocks you need to exit. Yeah. And all stocks in this portfolio are accompanied with a research report, and focus is always on the worth of the stock. Without knowing the worth of the stock, it is almost impossible to make steady and consistent. Coming to the Smart Gains, this was our first product, which was launched on 30th of December 1999. Yes, about 26 years back, we started. And here the holding period is 3 to 24 months, and rest of the things are pretty same as we have shared for small all cap portfolio. But this is not a portfolio. We recommend single stock every Wednesday. Then comes the Smart Gems. This is very much like the Smart Gains, except for the fact that this was started in 2007, and holding period varies from 2 to 5 years. Often it is 3 to 4 years. And we recommend only one stock per month. Coming to the next is the Smart Edge Picks. This is a very different kind of product. Here we recommend hardly one stock in a year, and this was started recently in 2022, years back. And holding period is 8 years plus. Yes, these are the stocks which we strongly believe that you should hold for very, very long. Coming to the other parameters, market focus is always all cap in all the 4 schemes. Frequency, as we have shared, this is on Wednesday. Smart Gains also Wednesday. Smart Gems is monthly, and Smart Edge Picks is opportunity based. In all these schemes, you will be able to see the past 100 stocks, and this is the subscriber rating given to these products. And this is a 6-month plan, and this is a 12-month plan. So for all cap and smart gains and for smart gems, so amount is varies from 13,500 to about 15,000. For this, it is a very different kind of a scheme, and including GST, it is 1,77,000. So these are the other ways where how we help gain smartness, gain conviction, gain confidence, and all these things can be held through the website, mobile app, webinars, like the present webinar we are doing, seminar, workshop, publication. We write regularly in Smart Investment, the paper published from Ahmedabad in English as well as Gujarati. Also, we write the blogs, which every week on Saturday, like today. And then we have a presence on social media also, but not to that extent. Yes, I am an author of the book, Way to Billionaire. Those who are interested to know about this book, they can visit our website, smartverc.com. If you want to have a look on the past webinars, you can go to our website under the Knowledge Center. The very first option is webinar. So how we are different? There are so many SEBI registered research analysts who recommend stocks. So how we are different? So I am the owner of Smart VRC. My age is 59 years, and over the years I have added several qualifications, and the last one was the PhD. And after attaining financial freedom, I left a public sector job. Previously, I was in BHL, and when I left, I was in a very senior management level. And why I left? I left because I attained the financial freedom, and I want to do what I like in my way with the like-minded people. So I had a great passion for equity research. That is the reason. The other key differentiator is we are able to find the worth of the stock with really a good accuracy. So all our stock recommendations work in a closed loop fashion. I mean to say, if you receive a stock recommendation or a buy recommendation, you'll also receive a recommendation or sell. And we are always easily accessible. You can always WhatsApp, and I'm very sure within 2 or 3 years you will get the reply. So for smart gains and smart gems, we recommend individual stocks, and this is the format which you receive the notification. Notifications are sent on mobile app as well as email. Now, this is about the smart all cap portfolio. In short, we call it SAP. This is 20 stocks. All company sizes are there: medium-sized companies, large-sized companies, small-sized companies, and all are growth stocks because we strongly believe in growth stocks. And all have a story behind them, a very tempting story. As we said, changes are made only on Wednesday. Coming to the market capitalization, these are the kind of stocks we have presently. I mean to say, in terms of the market capitalization, we have divided into 3 parts. There is the small cap, mid cap, and large cap. So small cap is about 39% weightage, mid cap have 30% weightage, and large cap have 1%. Coming to the sector weightage, these are the sector weightages presently. So engineering and infrastructure are the highest weightage. Coming to the stock category, 80% are growth and 19%, 20% are value. Value in terms of the past performance. But going forward, These all are under a growth category. So once you subscribe and once you log into our website, it looks like this. This just to give you a feel. This is the dashboard, and these are the products. If you subscribe, and whenever we update anything about the company, you get a blue tick here. Once you read that update, this will disappear. So this is a dashboard for smart all cap portfolio, and we have, apart from the model SAP portfolio, if you want to invest the amount of your liking, then we have created a customized SAP portfolio. You can put the amount there. Automatically, it will tell you for that same weightage as for the model portfolio, how much shares you need to buy. As far as the subscription is concerned, it is very simple. At the time of registration, you will set your own password. And once you make the payment, subscription begins instantaneously, immediately. And dashboard is very simple. As I've shown you, there are FAQs for in every product category. We have put the FAQs, and notifications are sent via mobile app and email only. So that was all about the smart VRC, what we do. Coming to the sector-wise prospects. So these are the last 12 months performance, how the different sector indices have performed. So the highest gainer has been the BSE auto sector, which has gained 19.1%, and the lowest one, the BSE Realty Index, had delivered minus 17% returns. So rest are in between. Average returns are nothing to speak about 2.37% only. And remember, this may not match with most of the retail investors because we don't have these kind of stocks, what these companies have in their indices. These, like in BSE Auto, they have all the good, I should not say only good, but also the large companies. So Maruti, Mahindra and Ashok Leyland, all those things will be. But normally we hold only one or two stock from each. So that is why our returns may not match with this. And because not only this name of the companies, but in terms of the size of the company also, most of the retail investors hold small sized companies, which have not done as good as these indices. And this is nothing abnormal. This happens whenever the market falls from the peak. So nothing to worry about. After a time, as far as the sector prospects are concerned, that is our in-house assessment. We find that auto and related, the domestic one, have decent prospects. Exports are uncertain, and mainly it is because of the slowdown worldwide, and not only the slowdown worldwide, but also the tariffs from the US. So that is why it is uncertain. And rest of the things, cable have a decent prospects because of, especially the power sector is doing excellently well. Cement is doing very, very well and may continue to do well because of the fall in raw material prices. Construction, defense is as of now it is good because most of the defense companies have at least for 2 years of orders. IT we have written as cautious because recently this Infosys went for a buyback and it was a huge amount. That shows that the company is not. That is our understanding that the company is not able to find the way to deploy the money, and so they thought it fit to return it to the shareholders by buyback. Now the question is, when will the normalcy return? Now that is very difficult question because we at Smart VRC we never believe in predicting any event, but we are always prepared for it. So let the event happen, and we will do what is required based on the stock price movements. So we have tried to answer your query. This fall will continue until the valuations become very attractive. Yeah, it is in some of the sectors we find that the companies have already become attractive, but it seems the market is looking for very attractive valuations. And this can happen in two ways. Either the price comes down or the companies report good earnings growth. And coincidentally, both things are happening. Prices are also coming down and companies are reporting good growth. Latest quarter, as I said, there is a significant improvement in sales as well as net profit select companies. And if we go by the history, as I said, it has happened 6-7 times during last 25, 30 years. And normally it takes 1 to 2 years, and already 1 year is over. So hopefully in the year 26, we may see a rebound. There is a strong likelihood. But again, I would stay away from predicting with very high confidence because it is the market that is a stock market. That is the name stock market itself is that you cannot be very certain. Yes, you should have a conviction on your stocks. Let anything happens. My CEO, and I say my CEO means the companies where I have a stake. They are smart enough to decide what to do when anything significantly different happens. I mean to say, if the markets turn volatile, they know what to do. So that should be the confidence. And this is my favorite. I can say he's a Peter Lynch. He has a record of delivering very high returns of the order of around I think 29% for 13-14 years when he was managing a fund. He says that nobody can predict interest rates, future direction of the economy, or the stock market. I fully agree with him, and my experience is always with him. I am a great fan of Mr. Peter Lynch. And he says, dismiss all such forecasts and concentrate on what is actually happening to the companies in which you have invested. That is the only way to outperform, to generate very high returns in the market. You should focus only on the companies where you are investing. Forget about what is going to happen in the economy. Of course, we should be updated that how the interest rates are moving, how the inflation is moving, how it will impact our companies rather than the whole economy. So this, I keep on saying that price is the slave of earnings. If earnings are good, if there is a good growth in earnings, it is only a matter of time share price catches them. So remain fully invested all the time in top 15 to 20 exciting stories at attractive valuations, really diversified. Each word has a very great meaning. Remain fully invested. So if you are not remaining fully invested, if you are keeping some amount set aside, so if the market falls, then I will invest. There is a possibility that market may not fall further, and you may keep on holding that amount, and your returns will be impacted. So all the time, remain fully invested all the time in top 20. 15 to 20 is good enough. The number of stocks to give you a diversification. All should have exciting stories, not for the sake of having 20 stocks, but each and every stock should have a very exciting story. And all these stocks should be available at attractive valuations. And then it is possible that all defense stocks are looking attractive to you. That does not mean that you should include only the defense stock. You have to diversify also. So you have to keep your portfolio really diversified in terms of the market size, in terms of the market capitalization, in terms of the size of the company, in terms of the sectors it represents, in terms of the business owners. So that is how the diversification. As far as the rupee strength is concerned, recently Mr. Sanjeev Sanyal, who is the Economic Advisory Council to the Prime Minister, he said that I am not concerned about the rupee at all. Its current weakness should not be necessarily conflated with some economic worry, because historically, Economies that are in their high growth phase very often go through a phase of exchange rate weakness. So what I can make out is he is referring to the Chinese growth and also the other economies which have made very high growth. At that time, they kept their currencies weak intentionally. Maybe he is indicating to their economies. So try to understand whatever I have given you is um, a strong enough matter. Have a confidence, and to give you further confidence, this is the share market chart for BSC small cap from 2002 2025 for the last 23 years. As you can see, it has given fabulous returns. And similarly, BSC mid cap has also given very good returns. So we have to only understand that this is a passing phase. ये दौर भी गुजर जाएगा. So once you understand this thing, then it is only a matter of time. Automatically, that will take care of your fear. Why small and mid caps will continue to deliver better returns? There is a reason for that. Why they have delivered very good returns and why they will continue to deliver very good returns. Because in these companies, often they are the first generation entrepreneurs who have historically given a big growth to the companies they have created. It is not only in India, but it is a worldwide known fact. First generation entrepreneurs give the biggest boost to their companies. And there are reasons for that. It is not only it is their passion, but also when they start a company at a small scale, they give you good scope for scalability. And these small companies are agile. They can change in a very short time. They can change their strategy. They can change their product in a very short time. And often their promoters uh, have a relatively more stake in the company, and there is a low institutional presence. These companies are under researched and missed. That is why they give better returns, and they will continue to do so. There is a feedback from one of our subscribers. He is subscribed to our services from last 4 years, and all the recommendations are very well analyzed and shared after thorough research. It is getting reflected in the movement of the stock in this right time period. Whenever in doubt, we get clarity in the minimum time possible. Please continue to support with superior services in the coming times. Thank you, Mr. Ian, and we assure you we will continue to give you better and better technological support, also our personal support also, and we always seek feedback from you people, you subscribers, and even non-subscribers can also give us feedback so as to give the best to you. So we, as I said, our smart VRC, we are going to complete 26 years, and we are pleased to offer you a flat 15% discount on eligible subscription for all the products. And this discount will start from 24th of December and will be available up to 29th of December. And during this period, there will be a provision for entering the coupon code, and coupon code will be SMART15. When the offer starts, we will intimate all of you. Once again, I request those who have joined late can join our WhatsApp channel, and you will really, I'm very, very sure you will like this, like the contents in this channel, and it gives us a lot of flexibility. So this was all about the today's presentation. Now we are coming to the question answer session. You can type your questions in the chat box with your name, or you can raise your hand using the reaction feature. Thank you. there is some technology happening. There are some changes. Just wait for a minute. Yes. So you have any questions, you can ask to the chat box. So please repeat the fees table. Okay. Dinesh Darji. Okay, I will send you on WhatsApp. Uh, Mohit Sasdev. Regarding the QR code, yes, I will share with you. I have taken note of it. So this is 157th webinar. Earlier available on YouTube. No, they are not available on YouTube, but most of them are available on our website. Ashish, Mr. Ashish. Okay. On Monday, European defense stocks were down on news of possibility of Ukraine on agreeing to end war. Indian defense stocks trade at high P multiples, although with high growth too. Our defense sector is going down too, similar to small cap index. Will it be good to add fresh money in defense stocks? So, Ashishji, as I said, we are always looking for very long term. What happens to Ukraine and Russia war is going to have a very little impact on our defense stocks because our export to these countries is insignificant, and also most of the defense companies have an order book of 2 years or 3 years, so in the multiple of 3-5 times of the last year's turnover. So I don't think we are going to have that much of impact. But nevertheless, some of the stocks are commanding very high valuations, and I would recommend you to go for double check the valuations and the future growth prospects before going on to them. The Jyoti reason how long I have to hold. So for the regarding the stock specific, we don't give any recommendation in the webinars. So it is very clear from the regulator, that is the SEBI, that if I say that buy these stocks or sell that stock, then I have to prepare a complete research report and keep with me. So we have even in the past also we have avoided this thing. Why stop WhatsApp group? So Deepak Bhai Patel, there are new terms and conditions from Meta. According to them, we cannot send more than 35 broadcast messages in a month, and our requirement is about 200 broadcast messages. We have to cater to all the services. That is why we have stopped. Mr. Mahesh Bhalaria ji, I am a subscriber of Smart VRC from last 3 years. Can you please suggest out all the recommendations which is best small and mid cap stocks having good valuation at current phase? Okay. So, though you have been subscriber of Smart VRC from last 3 years, but you will appreciate that in Smart Gains there are only 28 open recommendations, and in Smart Gems there are I think about 25 open recommendations. You have to select from them only and that has to be based on your risk profile. I can suggest, but I don't know what is your risk profile. So maybe I may like a bit higher risky with a stock with a higher risk, but that may not be the case with you. So you have to decide yourself only. Sir, how much sector weightage we should keep for defense stocks? So for an average risk taker, I can say that you can have a sector weightage of about 15 to 20%. That would be sufficient on the upper side. Why Infosys has directed TDS? So that is a very specific company. This thing I cannot tell you why they have directed TDS. Is difficult for me. Interest rates are going down. Why we don't have any recommendation on NBFs? Yeah. Uh, if you look at the results from the NBFC, you will find that the growth is not happening to the kind of valuations they have. Also, due to the technology, there are a lot many unlisted companies have come into the picture, and they are providing good services at reasonably lower rate of interest. So there is a lot of crowding in the sector, and that is why the profit margin has got squeezed, and we don't find any good stock at this juncture. Nevertheless, whenever we find, we will definitely give you a recommendation. So this was all about the chat box. You have given the message. Any other query? FMCG ETF. So in the FMCG space, there is a very stiff competition because there are a large number of uh, big companies. MNCs are there. So profit margins are pretty less. Despite high return on equity, the growth is not there. And that is why I don't think we have recommended any FMCG stock from last many years. And at this stage, I think one should go for, of course, FMCG stocks are very stable, but our objective is to get returns. Stability is, of course, they are a consideration. If you like the stability, then you can go for FMCG stock here. There is nothing wrong in that. As I said, it depends on from person to person's risk profile. Dinesh, I will share the piece chart with you on your WhatsApp. So, Jeet, Jayesh and Jeet, you have raised your hands. Unfortunately, I'm not able to find the way to unmute yourself to you. Yes. Jeet, you can unmute yourself.
Yes, sir. Seeing the gold and silver rally, is there any view of yours?
In view of gold and silver
Gold.
rally.
Yeah.
Yeah, you want or view.
Yes.
Okay. So we are very much focused on equity side only. There are, of course, other investment assets like gold, silver, that is the commodities, real estate. mutual funds, FNO. There are many things where the options are there to invest. And traditionally, I have been saying that you should have about 15 to 20% investment in gold. But just because recently gold and silver have shoot up, their prices have shoot up. So I would not recommend that go on board, because predicting the gold or share price is very difficult, because they themselves do not do anything. It is the purely demand supply gap, and one should be able to predict what is going to happen in times to come in terms of who will buy the gold, from where the demand will come. Uh, in terms of equity, what happens is it is not only the demand supply equation, it is also the performance of the company which decides the demand supply equation. In terms of uh, when we come to the commodities like gold or silver, they themselves do not do anything. It is purely the demand supply. It is very difficult here to predict, and of course, I would avoid to predict anything about gold or silver. What I can say is you can have about maximum, one should have about 15 to 20% investment in gold or silver. That too in a staggered period. Don't go on board. That can be very risky. So that is all I can share about the
Okay.
gold and
And
silver.
one more, thank you, sir. And one more thing, where are you coming on TV, sir?
When I'm
Waiting.
coming on TV,
Yeah.
why you want me to come on TV? Just out of curiosity, I'm asking.
Just, I would want to see an interview of yours wherein you share all your journey throughout, right from your childhood to till today.
Yes,
That would be an
yes.
interesting view for us. I mean, viewing for us and insightful as well.
Okay. So, as I said, I have long back I have achieved financial freedom. So I do what I like. Somehow I'm not comfortable going to the TV, because it will involve a lot of time, and there are many other things which I would not like to share here. But I'm very comfortable with friends like you, and would love to work with the people I love, and people who love me or not is a different thing. But it is always my endeavor to help retail investors to make money. Of course, there are good analysts also coming on TV, though I don't watch television. But through the feedback, I've come to know that yes, there are some very good analysts. If given an opportunity, maybe I may come. Maybe once or twice I may come, but definitely regularly I'm not going to come on TV, and it is not my my
That's
desire.
so
I say
one or two times also will be more than enough, sir, because you'll be sharing all your journey.
yes,
That
yes,
will be
yes,
very helpful and insightful to most
yes,
of the
yes,
people.
yes. I agree. That I agree with you. Because we can help more, we can cover many times more investors, uh, retail investors.
Yes, yes.
Yeah.
And at times you can get out of your comfort zone, sir, and get into uncomfort zone, so that we can know more about you. Actually,
No, it is not the question of comfort. It is the question of means I should be happy. I feel inside I should feel very happy to this thing, because in TV most of them they are not for investors are not sharing, analysts are not sharing their wisdom or their experience, or they are not um, educating investors. They are always more interested in giving the tips. So, and that is not my zone. So, as in the current webinar, I didn't say a name of any stock, but still I enjoyed. So that is a different thing. But definitely, if given a chance, I would love to share my learnings.
and one more thing, sir, is there a possibility you coming to TIA 2020 this time, Tamil
See,
Nadu Investor Association?
about 3 to 4 years back, I tried. I visited their office also, but somehow it could not materialize. Means I don't know what they are. What is their criteria? I do not know. Means, But I have recently, about I think 15-20 days back, I have seen the advertisement. They are again offline. Yeah.
Thank you, sir.
Thank you. Thank you. Yes, Jesh.
हाँ सर, नमस्कार।
नमस्कार।
सर अभी 6-7 साल हो गए आपसे जुड़े, और 7 साल में तो हमने ये सीखा कि बिल्कुल डरना नहीं है, लगे रहना है और
हाँ।
पिच पे बने रहना है।
यस
तो
यस।
थैंक यू सर, आपने हमारा विजडम इतना इम्प्रूव किया, हमारा रिस्क एपिटाइट, आपसे साथ जुड़ के हमारा रिस्क एपिटाइट बढ़ा है, और हम बहुत ही कंसिस्टेंटली लॉन्ग टर्म में बिलीव करने लगे हैं। जो पहले थोड़े बहुत ऊपर नीचे में हम डर जाते थे, आजकल नहीं डरते, और पिछले बहुत सालों से हम स्टेबल है। तो थैंक यू, थैंक्स अलॉट सर।
थैंक यू।
और दूसरा सर, फ्रॉम लास्ट लास्ट ईयर में गोल्ड सिल्वर में बड़ी एबनॉर्मल वॉलेटिलिटी रही है, और सिल्वर
यस।
तो बेतहाशा बढ़ा है। तो समझ में नहीं आ रहा इतनी हाई डिमांड, क्या ये एक सेक्टरल की वजह से आई है, या फिर लोगों ने खरीद के डंप इकट्ठा करना शुरू कर दिया इसलिए आई है, या मतलब समझ में नहीं आ रहा इतना गोल्ड और सिल्वर में इतने एबनॉर्मल रिटर्न्स कैसे आ रहे हैं। तो
हम्म।
पीपल, तो इसका मेन रूट कॉज क्या है सर, क्या समझ में आ रहा है? मेरे को तो ज्यादा इसमें नहीं समझ में आया क्यों बढ़ रहा है इतना बेतहाशा।
देखिए, गोल्ड और सिल्वर है ना, सब डिमांड सप्लाई का गेम होता है। तो कौन खरीद
जी।
रहा है? तो इसमें दो तरीके के लोग होते हैं। एक होता है रिटेल इन्वेस्टर, है ना।
हम्म।
तो रिटेल इन्वेस्टर में तो ऐसा कोई चेंज आया नहीं। हम जितना
हम्म।
शादी में या जहां भी हम जितना भी गोल्ड देते हैं, ज्यादा ज्यादा आप उससे 5%, मतलब इन टर्म्स ऑफ द वजन के हिसाब से मैं बोल रहा हूँ, ज्यादा ज्यादा आप 5% या 10% ज्यादा दे दो, इससे ज्यादा तो आप गोल्ड दोगे नहीं। और
हम्म।
दूसरा, धीरे धीरे जो लेटेस्ट जनरेशन के जो बच्चे हैं, वो गोल्ड की तरफ कोई ज्यादा अट्रैक्शन नहीं। तो जो रिटेल लोग हैं, वो लोग तो गोल्ड ज्यादा, उसमें ज्यादा ऐसी कोई स्पर्ट आया नहीं। स्पर्ट आया है गवर्नमेंट्स में। जब जब
हम्म।
ऐसे वार्स होते हैं, जैसे यूक्रेन रशिया वार चल रहा है, या
हम्म।
डोमिनेंस का एक एक फाइट चल रही होती है, अनकही फाइट होती है, जैसे यूएस डोमिनेट करना चाहता है, डोमिनेट तो कर ही रहा है, चाइना डोमिनेट करना चाहता है, तो उसका क्या तरीका होता है? उसका तरीका होता है कि जैसे चाइना के पास बहुत सारे यूएस डॉलर के रिजर्व्स हैं।
हम्म।
अब वो उनको अगर मार्केट में सेल करेगा तो यूएस डॉलर की वैल्यू कम हो जाएगी, और उसकी जगह वो क्या करेगा, वो अगर सेल कर देगा यूएस डॉलर को, तो कुछ उसको खरीदना पड़ेगा। तो वन ऑफ द बेस्ट ऑप्शन इज गोल्ड, क्योंकि वो बहुत ही लिक्विड होता है, और गोल्ड की प्राइसेस हमेशा बढ़ती रहती हैं, तो वो लोग गोल्ड खरीद लेते हैं।
हम्म।
लाइकवाइज, मतलब इंडिया में भी आरबीआई ने भी काफी गोल्ड खरीदा है, और जो दूसरे रिजर्व सेंट्रल बैंक्स हैं, उन्होंने भी काफी गोल्ड खरीदा। दैट कैन बी वन ऑफ द बिग रीजंस कि क्यों गोल्ड इतना बढ़ गया है। और जो इन्वेस्टमेंट का पैसा होता है, वो
हम्म।
बहुत अलग अलग जगह पे अलग अलग टाइम पे इन्वेस्ट होता रहता है। जैसे शेयर मार्केट है, क्रिप्टो है, गोल्ड है,
हम्म।
सिल्वर है, रियल एस्टेट है, ये इस पे रोटेट होता है। तो जब जहां जिसको अच्छी अपॉर्चुनिटी मिलती है, वो वहां पे चला जाता है, फिर वो स्पेकुलेशन हो जाता है। गोल्ड और सिल्वर में कभी इतना स्पेकुलेशन नहीं हुआ जितना अभी
हम्म।
पिछले 2-3 साल से हो रहा है।
हम्म।
और आगे क्या होगा, ये तो मैं आपको, मतलब अपने पिछले क्वेश्चन में आपको बताया था क्वेरी में, कि ये मेरे लेवल से ऊपर की बात है। इट इज वेरी डिफिकल्ट टू प्रोडिक्ट। मेरे ख्याल से 2 साल या 3 साल पहले ऐसा किसी ने नहीं कहा होगा कि गोल्ड डबल हो जाएगा या ट्रिपल हो जाएगा। तो
राइट।
इट इज वेरी डिफिकल्ट टू प्रोडिक्ट।
हाँ सर, हम लोग जैसे, हम लोग एज ए वी टुगेदर, इंक्लूडिंग यू, वी ऑल कैन, हाउ कैन वी टेक एडवांटेज ऑफ दिस सिचुएशन इन सिल्वर एंड गोल्ड? हम लोग, इसको ऐसा लगता है कि हम इससे बिल्कुल दूर हैं, तो थोड़ा थोड़ा मे बी 2%, 3%, 4%, ऐसे ही आप कंपनी सजेस्ट कर सकते हैं जो इन पे डिपेंडेंट हो, इनको एज ए रॉ मटेरियल यूज करती हो, या जो भी वाइस वर्सा, आई डोंट नो, इसका हमको एडवांटेज ले
तो
सकते हैं क्या?
इसमें ऐसा रहता है, एक वारन बफे का वो है, मतलब उनका मैंने कहीं पढ़ा था टेक्स्ट। तो उनसे
जी।
पूछा गया था कि आप गोल्ड में क्यों नहीं इन्वेस्ट करते। उनका कहना
हाँ।
था कि गोल्ड कुछ करता नहीं है, इट इज इनएफिशिएंट है। और गोल्ड की जगह आप जो उस खदान में जो मैकेनिकल मशीनरी यूज होती है,
हाँ।
उस
हाँ।
कंपनी के शेयर खरीदो आप, तो उसको आप उसमें आपको ज्यादा फायदा होगा बजाय कि गोल्ड के। क्योंकि जब गोल्ड की प्राइस बढ़ेंगी तो ज्यादा माइनिंग होगी, तो ज्यादा वो कंपनीज यूज होंगी, कंपनी के प्रोडक्ट्स यूज होंगे, कंस्ट्रक्शन इक्विपमेंट्स यूज होंगे, लिफ्टर्स यूज होंगे, तो
सर।
उनमें ज्यादा आपको बेनिफिट मिलेगा, ऐसा उनका कहना है। अब मुझे पता नहीं है कि गोल्ड की खदान में कौन सा कंस्ट्रक्शन का इक्विपमेंट यूज होता है। एंड ऑल्सो इट इज नॉट दैट इजी कि गोल्ड की डिमांड बढ़ गई तो एकदम से माइनिंग ज्यादा हो गई। इज नॉट दैट
हम्म।
इजी। इज ए स्लो प्रोसेस, दैट इज वाई, अदरवाइज तो गोल्ड के प्राइसेस स्टेबलाइज हो जाते हैं। और जहां तक फायदे की बात है, कैसे फायदा उठाया जाए, तो इफ यू अगर आप गोल्ड में इन्वेस्टमेंट के हिसाब से पैसा डाल रहे हैं, तो मैंने आपको अभी थोड़ी देर पहले भी बताया था कि आप 15 to 20% उसमें इन्वेस्टमेंट रखिए। ठीक है, और मैं आपको एग्जांपल देता हूँ कि मान लीजिए आपने 20%, बहुत सिंप्लीफिकेशन के लिए बता रहा हूँ कि 20% आपका गोल्ड में होता है और 80% आपका अगर शेयर्स में होता है, तो पिछले 1.5-2 साल में मेरे ख्याल से गोल्ड डबल हो गया है, राइट। और शेयर में आपका पोर्टफोलियो पिछले 1 साल में तो कुछ भी बढ़ा नहीं है, तो आपका जो गोल्ड का वेटेज है वो बढ़ के अभी 30-35% हो गया होगा, अगर आपने 20% होगा। तो दिस इज ए गुड टाइम टू एक्चुअली ऑफलोड गोल्ड। ऐसा वो फायदा का अब होता है जब आपने इन्वेस्टमेंट पहले में कर चुके होते हैं, तो अभी टाइम होता है कि उसको कम करके आप 25% पे लेके आएंगे, ऐसा। लेकिन अभी क्योंकि गोल्ड के प्राइस बढ़ गए और अभी अपन इन्वेस्ट करें, तो दैट इज नॉट द वाइज थिंग, तो वो ठीक नहीं है, दैट इज नॉट द वे टू इन्वेस्ट। जैसे अभी जैसे शेयर के प्राइसेस कुछ मिड कैप और स्मॉल कैप के प्राइसेस काफी लो हैं, अगर वो अभी हम इन्वेस्ट नहीं करेंगे और 1 साल बाद अगर वो 30-40% बढ़ जाएंगे और फिर हम बोलेंगे कि अभी हम इसमें इन्वेस्ट कर सकते हैं क्या, फिर क्या होता है कि प्रोबेबिलिटी कम हो जाती है।
लॉस ऑफ कॉस्ट।
तो ये हमारा एक अंदर से वो रहता है, एक इसको बोलते हैं रीसेंसी इफेक्ट, रिसेंटली जो हुआ होता है हम उसके पीछे हम अट्रैक्ट होते हैं। 2024 में शेयर्स में अप टू सितंबर बहुत फायदा हुआ था, तो नो वन वाज टॉकिंग अबाउट गोल्ड, सबको था कि शेयर्स में अगला मल्टीबैगर कौन सा होगा। सो दैट वाज द टाइम कि आप अपने पोर्टफोलियो में देखते हैं अगर टोटल इन्वेस्टमेंट में 20% गोल्ड है कि नहीं है, तो उसको बढ़ाया।
राइट सर।
थोड़ा सा मार्केट ऐसा ही है।
जी।
रियल इन्वेस्टमेंट जो है ना बहुत अनएक्साइटिंग टाइप का होता है।
हाँ हाँ।
ठीक है,
राइट सर।
या
थैंक यू वेरी मच सर। हाँ, थैंक यू
थैंक यू
सर।
जयेश, थैंक यू। आई एम वेरी हैप्पी टू सी तलाक्षी गोसर साहब, आपने अटेंड किया है ये सेशन और आपने लिखा कि इट्स कॉल्ड स्मार्ट मनी। यस, आप मेरे ख्याल से 75 प्लस होंगे, एंड मेरी बड़ी इच्छा है आपसे मिलने की सर, मैं कभी मुंबई आऊंगा तो आपसे जरूर मिलूंगा। सर शेयर कर रहे हैं कि इफ वन वांट्स टू बाय गोल्ड, ही मस्ट just hand over funds to his wife and she will buy it for long term. So निमेश, निमेश जी आप जानना चाह रहे हैं कि you are a old subscriber of Smart Gems and you want to renew your subscription with 15% discount. This discount offer will start on 24th of December, and at that time, means between 24th to 29th of December, you can avail 15% discount. And at the time of subscription, there will be a coupon code. So there you have to enter the coupon code SMART15, get the discount. Nitin Gupta, can you make a video to achieve financial freedom with step-by-step actionable points and review the milestone? So this achieving a financial freedom, this is actually core area of financial advisor. And I am a research analyst. I'm registered with SEBI as a research analyst, not as a financial advisor, because financial advisor demands different kind of regulations and different kind of things, and I'm more suited to a research analyst category rather than as a financial advisor. Of course, I can help, but that then or to get a financial freedom, one must know in detail the family background, the family requirement, and the style and the future target targets and all those things. It is a very complex process, but at the same time, it is a mechanized process. Very much possible because I have done it for myself, and it requires a very regular monitoring. So I am not in a position to give you professional advice on that. So Mr. Dinesh Darji, you have asked Mr. Talakshi Gosar writes in which paper, comes in which channel. So he is a very old and very bold subscriber. There are very few old and bold subscribers. but he has very clear fundamentals, and he narrates the situations, the stock market situations, very well. He's a good storyteller, and once he has given a speech in front of Harshal Mehta also. If I get a video link, I have a video I will share with you. Yeah. So with this, we have come to the end, and thank you very much for joining and this webinar and sparing your valuable time. Thank you.